So today actually what we are going to do is go more towards the technical side of it, right? Yesterday we were trying to understand that how what kind of asset classes are available. So we talked about a bit about gold, we talked a bit about commodities, currencies, right? Uh, we try to create a watch list. So before we move on to the technical side of it, let's just see the prices today, that where we have. So yesterday when we were checking gold prices versus today, because it's really important to look at your watch list every single day. So today, if you see, yesterday gold closed around $3,033 per ounce. Current price is 3,040. Today's low is $3,022. So as compared to yesterday, gold is still up by 0.2%. A lot of reasons behind that. The recent airstrikes over Gaza and Israel, that is one thing which is running in. Then obviously the tariff tensions caused by Donald Trump, which has pushed stock markets down, which is also the reason why gold prices are higher. So at this point of time, is gold price moving higher because of physical demand? That is one part, but more as a safe haven. Investors, when they're under panic, they tend to incline to buy more and more gold, and that is the reason why we have seen gold prices just moving higher. If you see silver, on the other hand, look at the big difference. While gold is up by 0.1%, silver is down by 0.3%. What we were talking about yesterday, that whenever the tariff threats come across, people would buy more gold because uncertainty, right? They are really scared or uncertain where the markets will go. So more gold. But why silver is down? Because silver's usage is more industrial. It is used in a lot of products. So trade tariffs means a lot of disruption in the exports, in the trades, which would possibly bring the silver demand down, and we are seeing the prices going down on that sentiment, that if tariff threats would happen, that would impact the prices of silver. So that is why silver is dropping. This is not something which you see every day. Gold and silver, they move in similar directions. Maybe not similar percentage increase, but most of the time they move in similar direction. But when something like this happens, where there is uncertainty, so gold acts as a safe haven, people start buying more gold. But when it comes to silver, silver is not a safe haven. Silver has more of an industrial usage. So if you see that if manufacturing is slowing down, if there is a possibility where global trade would suffer, that would impact silver prices negatively. Yes, sir.
Ask some questions in between the problem.
Please ask.
Now, what about platinum? Is the platinum also a part of this? The gold and platinum? Usually, platinum is 2.5 times more than gold. Right?
Yeah. So platinum and palladium both. In fact, normally I want to keep I want to keep the watch list not heavy, but let's say since we are talking about it, so I'm going to add platinum and palladium also in this. Platinum and palladium both comes as precious metals, like gold is, because their occurrence is very rare. So it's not like today if you see gold prices going up due to higher demand and you want to just balance the supply, you cannot do it just like this, because mining cost of gold is higher, plus it takes more technology now to mine gold than before. So gold, silver, platinum, palladium, all four come into precious metal category. If you see platinum prices also, today it is down. You see palladium prices also, it's down. The reason is again, when the global trade suffers, gold would still act as a safe haven because there would be a lot of uncertainty. But a lot of these other elements like platinum, palladium is used in automobiles as a metal to filter pollution. So that is the main usage of palladium. Platinum and palladium a lot of times can be used interchangeably. But when we see, from a safe haven perspective, gold is the only metal people would like to buy when uncertainty grows. So you see, while gold continues to go up, platinum, palladium, silver, all these metals are going down. Next is Brent oil and WTI. So yesterday we talked about two kinds of oil. One which comes from the US oil rigs, one which comes from the Northern Sea. And if you see both the crude oils, both of them are slightly higher. And if you see, even the percentage increase is very close. Please remember this thing, because this close relationship, tomorrow when we discuss the trading strategies between oils, this relationship is something which you should remember. So the foundation of, they move very much similar. So if this is up, this is also higher, even the percentage increases are also very similar. And this will be a very useful information tomorrow when we are doing a pair trading strategy between Brent and WTI. Then we look at wheat prices today, down by 0.4%, coffee prices up by 0.5%. If you see S&P, Nasdaq, the US market is slightly up. It did not move that much, but it is slightly higher. But look at German index, down by 0.5%. Look at Hong Kong index, up by 0.6%. Now this is where, when we were talking about diversification, why I was talking about diversification, that while Germany is down today, US is slightly higher. If you see, Hong Kong has moved 0.6% up today. So Asia, Europe and US, these three markets, if you diversify, there are a lot of benefits. While one is going down, not necessarily the other will also fall, especially between US and Asia. So it's not necessary if US market is falling, Hong Kong is also falling, because both are moving in a very different direction. While US is facing getting out of a very high inflationary pressure, trade tariffs might cause higher inflation in US. But when it comes to Hong Kong, it's different. China is experiencing deflation right now. So they are doing everything they can to inject more and more cash in the economy. So both of their economic policies are very different at this time. So it will be a good idea to invest a bit in US and a bit in China and keep tracking their index also. Then if you look at euro and pound, not much difference, slightly down. Dollar yen got better. Dollar became more stronger. Sometimes dollar also act as a safe haven. If you see shares, now Tesla fell more than we spoke about, 5.2% yesterday. Look at Amazon, another 1.4% down. Nvidia, another drop by 3.3%. Coca-Cola down by 1.06%. But if you see Tesla today in the market, so
this is in comparison to yesterday's close.
Yesterday's close. So for Tesla, if you see, yesterday's close was 225. Sorry, 237. Here. 237. And finally, when the markets, so this was today is Wednesday. So this you can compare. Yesterday's close was 225.
Sorry, come again.
Tuesday's close.
Tuesday's close is
237. Yeah. Okay. Yesterday's close was 225. So as compared to Tuesday's till the end, the price was down by 5.2%. Right now, market is not open yet. Okay. So when the market opens, we'll get to know that what is the impact today. But there is a pre-market trading already going on.
Yeah, what is that? What is pre-market?
So you'll be able to see.
So that would be the opening price.
Most likely. So if you see here, look at this bit. You can see this. Yeah. So today Tesla is up $6. 231. So yesterday it closed at 225. Right now in the pre-market it is trading at 231. Mostly it shows for today it might go higher. Also Tesla secured a recent contract for robo-taxis in a specific area. So I think that is a bigger news which is coming in. But there is, so as I said, that every single day we see a lot of movement happening. For intraday traders, volatility is something which has increased a lot. So imagine a stock which was down yesterday, $12. Today it has done a $6 recovery already in the pre-market, right? So you have to ask yourself a question that if I'm holding Tesla for 6 months, what is the kind of return and risk I am anticipating, right? Because we saw the chart yesterday in last 3 months, from 384 it has come down all the way to 223. So it is already a big drop. When to enter and how much to enter. So we discussed on the idea that we don't have to enter at once. If I wanted to invest $10,000 in Tesla, I must not invest it lump sum right away. What I should do, I should look at in a way where step 1, $3,000. If there is more decline, another $3,000. Another 10% decline, we go with the remaining $4,000. a ladder approach, right? That is a good idea to invest into any kind of stock, because why this? If you don't invest at all and the stock goes up, then you are regretting that you didn't do it. But if you invest something and if the stock goes up from here, at least you will make some money somewhere. If it goes down, very good. You get another very good discounted price where you can enter with the remaining amount of money. Checking watch list day on day, hour on hour, it makes us more familiar with these products. So today if I see dollar yen is 149.76, which means for $1 we need 149.76 yen. If you track enough, if you see this enough, eventually what will happen in your mind, there will be a range formed of this currency pair, and while this range forms in your mind, whenever this range breaks down or up, you would know what to do with it, and that is enough for a day trader to do it. Now why we are tracking these prices? Because price action is very important. Today's topic of technical analysis is more about understanding the price movement, right? Technical analysis is mostly performed by day traders. A long-term investor will not really look at charts and patterns every day, because for them the targets are much higher, right? Today if you're buying a stock, you don't really have to see a day-on-day trend. You need an entry point. You will be looking at a balance sheet, right? You will be looking at their assets, liabilities, how much sales they have done, what is the anticipation, what is the future like. As compared to technicals, it is completely different. So I gave you an example yesterday that if you are very hungry and in front of you there are two restaurants, one of them is very crowded, another is not. If you pick the one which is very crowded, then you are doing technical analysis. You are going with volumes. You just saw the restaurant which is very crowded and said, because it's very crowded, I'm sure it must be good. Just went in. But if you took your time, you saw what was the brand of the restaurant, what kind of ingredients they suffer, what is the quality of where they get their products from, what is the price of that, if compared to the competition, is it good or bad, then you are doing fundamental analysis, right? So technicals and fundamentals, they are very different from each other. Technical traders, they use these smaller time frames to look at the trends, right? So there are three main assumptions which we have to understand when we are learning technical analysis. First and very important, market discounts everything, which means all the emotions you can think of: fear, panic, greed, excitement, enthusiasm. So when you are buying a share, either of these emotions are responsible, because we are not emotionless. We can manage our emotions well, right? But at one amount of time, when you think about majority of the people, can we call ourselves as rational investors? Maybe you can call yourself, or to me, or to a third person. But can you take responsibility of everyone in the world being rational when they are investing? No. Because some people invest because they heard from other people. Some people buy something because they're just overconfident about it. Some people would buy in FOMO, right? Bitcoin went down to 78. People started panicking. A lot of people sold. When it went to 95, people had so much FOMO, they started buying at 95. Now again it's down to 84. So a lot of people. So what I'm trying to say is, market prices which you see, it feels like there is a lot of emotion in it. But technical analysis has one assumption, that price what you see right now is the fair price. Nothing can surprise you. There is no insider news which can surprise you. There is no Donald Trump who can tweet and change everything. Nothing. Although it is a fact, it can happen. But if a trader is looking at a chart, he is not going to think about what big news can surprise. The price which he is looking is a true fair price. He can perform his analysis. So they always assume in technical analysis that the market discounts every emotion. The price which I see of Tesla right now, It includes everything. It includes Trump's support, it includes panic, it includes enthusiasm, it includes everything. This is the fair price which we see. So,
Sir, I want to ask you one thing. No? There's a closing and opening, okay?
correct.
Now, when you close, particularly close, I understand closing, okay? But next day, market opens.
Correct, sir.
There's a pre-market also there because people must be
Correct.
decision buyers are there.
Correct, sir.
There is the pre-markets opens. What is the ground to open the pre-markets? Means what? I don't know. I don't understand.
So, pre-market. So,
No.
Yeah.
Opening, no, say,
Yeah.
Now today is closed by, for this, for example, the gold is closed. Not gold, but even Tesla, for example.
correct.
Tesla is closed 237. Okay.
Yeah.
188. At that day.
Correct.
Next day it opens around 225, for example.
Correct.
Okay. On what basis it is demand supply or exactly what basis it opens at
So,
225?
sir, most of the time in pre-market trading, you will not see bigger gaps. The gaps you see is in the actual trading platforms, because in a lot of platforms, pre-market trading is not there. So, when markets close, there are a lot of people who put their orders, right? There are limit orders, pending orders which are kept. So, when the markets open, the exchanges, they start bringing all the orders together. So, this is exactly demand and supply at that point of time.
No, but sometimes some of the American stock I've seen, okay, even the stock close at 12 o'clock at night,
Correct.
it goes up to 4 o'clock in the morning, it's trading going on, okay.
Because that is after hours of trading. So,
After.
yeah. So there are two segments. One is called pre-market. No, that is. Sir, please. Definitely.
I'm a very new person.
No. It is important that all of you should clear your doubts. So if
There's lots of information.
yeah, please. If you have any questions, ask then and there. See, that is the best part. We are a very closed, customized people here, right? So anyone has a question, please go ahead and ask. Exactly. So there are two segments here. There is one is pre-market trading, one is after hours. Pre-market trading opens up to a lot of investors from the exchanges before the actual stock market opens. So 5:30 p.m. in summers in US, Dubai time is when the US stock market opens. In winters, it is 6:30 p.m. Before the stock market opens, there is 1 hour of pre-market trading which is available. So on exchange-based platforms, like there are many exchange-based platforms which are directly connected to the stock exchange. They allow their clients, they allow their investors to do pre-market trading, right?
So which means that say yesterday's market closed say around 2:30
Yeah.
UAE time, early morning 2:30.
Yeah.
And the pre-market would open at 4:30 now. Maybe it would have opened by now. Is that what you're right?
By now, yes. So the price which you see of Tesla right now, it is in the pre-market already. Pre-market will open around, so if the timing is 5:30, maybe around 4 or 4:30 the pre-market trading begins, and then 5:30 market opens. After hours, when 12 o'clock market closes, maybe another 1 hour or 2 hours the after hours, and then again the markets finally close. On these kind of platforms, CFD platforms, because a lot of these are derivatives, you see only the trading when the market opens. So in the pre-market, if today Tesla has already gone to 231 and it closed yesterday at 225, so you will see a gap in the opening in this platform. There are a lot of CFD providers which allow pre-market trading, but then when they're allowing it, they wider the spread. So the buying selling difference is higher. So it comes at a big cost. So a lot of people don't really like to do pre-market trading on CFD platforms, on derivatives. But if they have an exchange-based platform, they can do it. But then exchange platforms do not give leverage or anything which you are going to understand later. But you can do both, either one which you are.
Can you name few exchange platforms, exchange traded platforms?
I think Interactive Brokers is one of those. So Interactive Brokers it's a very famous company. And I think they provide a lot of products. It's based in US. So you can always check those kind of companies as well.
I have found
Interactive Brokers. Yeah. So Interactive Brokers, you can do pre-market and after hours also.
I have found my son's work, not me.
Yeah. So Interactive Brokers, we are also connected to Interactive Brokers because a lot of clients would like to do options also. We provide option-based strategies as well. So you could do that. But then same thing, if you are looking for leverage by putting a smaller amount, trying to take a bigger position, that is only available on CFD platforms. It won't be available on the exchange based. Now, one main assumption is the market discounts everything. Second, very important is history repeats itself. History repeats itself means that we assume that the pattern which we have seen earlier, we are going to see it again, and that is a very popular pattern. So for example, a lot of times we see, so let's say let's open a chart and see. So look at this line right here, right? If I am looking at this chart, I can see that there have been some bounce backs around this level, this level, this level, and then now if price again comes back, we assume that there is going to be a bounce back. We don't think that how many cars Tesla has sold, what if Tesla goes down further because of negative sentiment, nothing. We follow what the charts tell us as a short-term trader. As a long-term investor, you definitely want to look at the balance sheet of Tesla. You want to see that what future holds for Tesla. You want to see how many vehicles they have sold, but you are looking for a very long-term movement then. As a short-term trader, you don't really care what is the next 1 year for Tesla is going to be like, because you are more worried about today. And what does it tell today? Today it tells that if it touches here, it should bounce back again, because we have seen in historically that whenever it touches, it bounces back. This is the essence of technical analysis. Now, obviously, in your mind, you are thinking that this is what we assume. But the reality is that when we are doing any kind of analysis, there are always some assumptions taken. For technical analysis, most important assumption, history is going to repeat itself. And third and last, very important, market always move in trends. Always remember this. So there's a uptrend, there's a downtrend, then there is a sideways trend, but there is always going to be a trend. So if you see this, right? When we see this is more of a sideways trend. Which is an uptrend? Uptrend is when every new low is on the higher side. Look at this. So this is L1, 2, 3, 4. You see higher highs and higher lows. This means it's an uptrend. Downtrend, lower highs and lower lows. When every new high is on the lower point. So you see that it's going downtrend. It is important that we understand where the market is trending towards. They keep talking about trend is supposed to be your friend. Go against the trend, it may not end well for your trade. Again, a lot of short-term traders would follow these charts, because if you have to place a trade today and you want to take an exit today or tomorrow, would you be care about what is coming next 1 or 2 years? No. Even if there is a big speech coming after 3 months from the CEO of Tesla, you're not worried about that, because you're worried about the next 10 or 12 hours, what is coming next. That is why we need to understand that when we are doing charts and patterns, we have to first examine the trend. And then there are a lot of these indicators which we can use. But to begin with something very easy, so the charts which we see right now, they represent, so we need to know what? We need to know first price. We need to know the opening, the highest, the lowest, and the closing price. So if I were to take a decision on the basis of how market is moving up or down, I need to know the price every second, every minute, every hour, every day. That is the only way I can form a pattern, right? To make a pattern, to create a pattern, We need to know historical things. Historically, what I need to know? I need to know the price of the product. I also need to know what price it opened today, what was the highest today, lowest, and what price it closed yesterday. How can I know about this? When I'm looking at the price chart of a product, how can I look at this? It is represented in a picture with something called a candlestick, right? So whenever we see this candlestick, this shows all these four very important factors which I would like to see. So why it looks as a candlestick? Because it looks like a candlestick. This upper thread right here, right? This is the wick of the candle. So I'm looking at, this is the highest and this is the lowest, right? Highest, lowest. If the price it opened was this base right here, if this was the price, say $10, and throughout that particular duration, finally it closed at 5 here, the color of this candle changes to red. It is as simple. So every red candle which you see right now, it must have opened here, closed lower than the opening price. So when the closing price of a particular product for that duration, it is higher than the opening price, lower than the opening price, the candle will end red. So if it opened at $10, closed at 5, the candle is red. But let's say in the same manner, another day when I'm looking at a different price candle, next day it opened at 5 and it closed at 10. That means the candle will turn green by the end of the duration. So these red greens are nothing else. Now you know when you're looking at a green candlestick pattern, something like this, if I zoom this, see. So let's look at this. Look at this green candle. See what does this box shows? It shows you the date, shows you opened at 381, closed at 410. What is the color of the candle? Green. If I move this slightly further, opened at 422, closed at 411. Color of the candle? Red. So every red candle, if you see on this left corner, just zoom this. This shows 1 day on the top left corner. What does it mean? It means that this entire thing represents 1 day. So if today is Wednesday and this was yesterday, so Tuesday, Monday, Friday, and then, so which instrument I'm using it? Okay. So every single candle will be representing 1 day. So can I say day 1, day 2, day 3, day 4, day 5? For 5 days, this product had lower closing, right? So can I say from 5 days, the prices have been falling day on day. Similarly, look at this, 1, 2, 3. 3 days of positive closing. It really matters for a trader because that is how you understand where the prices are trending at. If I change this from 1 day to every minute, right now the stock is not open. Let's see something which is more volatile right now. It is gold. Okay, let's say Bitcoin. If you see this, to change this to 1 minute, see the movement. This is every 1 minute, okay? Every 1 minute, and this is Bitcoin. Every 1 minute of Bitcoin. After 1 minute, the candle changes. So for that 1 minute, you will get what? For that every 1 minute, you will get opening, highest, lowest, and the closing. The minute passes, The closing price of the previous minute becomes the opening price of the next, and then you get another closing. So every minute passed, you will see this thread which is at the tip, this is the highest it reached to, the lowest it reached to. If it ends red, which means the closing price is lower than the opening price. If this ends green, so 1 minute, second, third, fourth, fifth. 5 minutes went straight positive. This 6th minute it was negative. Now the 7th minute has started. Every minute is changes. Obviously, you don't really have to look at a minute on minute candle. But for a short term trader, a great duration is when you select it to a 30 minutes chart. Okay. So we are going to first understand how to determine the trend. So for example, can I say, look at this, just looking at the price pattern here and click on draw, make a line, and if you see, look at this, look at every low is on the higher side, right? Every new low is on the higher side. This is an uptrend right here. You should be able to connect 3 to 4 points or 2 to 3 points to make a uptrend line. Why understanding trend is important? That you should know that if throughout 19th March, right, we are looking at a short-term chart, from here till here, the market has been trending higher. If this trend line breaks, should you be buying? No. Trend line breaks, which means prices might come down. That is why it is important that before you enter into the trade, you should know whether we need to go for a buy or sell. That will depend again on what side the trend is moving to. If right now it's here, right, it doesn't mean that the moment this broke, you start selling. Could be a false breakout. Market could move higher. See what happened here, right? That is the reason why when you're making a trend line, try to connect at least 2 to 3 important points so you're able to see that this is a strong trend. From here, a lot of people could go for a buy, right? Again, close it here, like you could have bought here, could have bought here, could have bought here, could buy here. So anyone, but this trend which you see will be valid for how long? If you take a trade today on this, if you're not able to get your profit, or if it does not hit your stop loss, then it's okay. But if you're not able to get your profit, tomorrow this trend will be very different because you're looking at a 30 minutes chart. You're looking at a very short term duration. You cannot buy and hold on to it for a week depending on this chart. You want to do that, you look at a bigger duration. But when you're looking at a smaller time frame, the validity of your trade should be also for a couple of hours, not more than that. Because this is a very common mistake we make. When we place a trade, our chart duration is very small, but we hold on to it longer, because if you change this to 30 minutes from 30 minutes and change it to 4 hours, you will see something different, right? Because now every candle represents 4 hours. In 4 hours, see what happens. Look at this. So I'm going to show you this range. You see here. See how in a sideways pattern it continued to move, right? The moment this was broken down from here, see, it just continued to fall. Whenever a pattern breaks, so there are a lot of people who do breakout trading. What is a breakout trading? Breakout trading means you are following a pattern, you are looking at it. The moment that pattern breaks, you go for a buy or sell. Here it has become very tricky actually. If you see right here, you extend it somewhere around here, you will see that there was a false breakout here. People could have gone for a buy, and then you see this big drop. That is why stop losses are really important, that no matter how much you rely on the chart, sometimes you might end up on the wrong side of it, right? Like this, there are so many. So I gave you an example of an uptrend. Yeah.
Happened across days, right?
Yeah, this happened across the days. So we are looking at 10th of February, then until the next week, 24th, 12, 15 days off. Because the duration of the chart is slightly longer. If I reduce it to a 30 minutes chart, it will be completely different. Okay. Now, let's try to understand this support and resistance part. This is where the entry and exit can be very easily defined. So today, if you are a short-term trader, you have to understand that what is trading all about? It is a game of probabilities. Anyone you meet, if they tell you that our trading signals are going to be the best, it is not possible. Not even us. If I sit with you and I tell you I have 15 years of experience and whatever trading signals I'm going to give you, you're always going to make money, it is not possible. Trading is about probabilities. First thing is you have to trade in different products, right? Trading platforms allow you to take advantage of falling prices also, which is called short selling. So today you don't really have to think about making money when the market is going up. Even if you feel market is going to come down, you can short sell. So there are two ways you can place your trades. One is going up, one is coming down. Most important thing is when you divide your trades into different products and you buy some, you short sell another, that is one way to achieve higher probability, higher winning trades. Second most important is your entry and exit. So you woke up in the morning, you're feeling really good, feeling very positive, just went on and did a trade which you thought would go really well, just because you're feeling positive. Not the reason why you should place a trade. Have to see whether it is the right time to enter or not. How do you find out? You need to see how many buyers are available at this price. That when you want to know, how do you get to know is, look at this. So we are looking at Bitcoin right now. Let's make this slightly even shorter term. Here, or 30 minutes is just fine. Okay. Now look at this. I'm going to draw a horizontal line. See this? Look at this price. Look at this price. Look at this price. Look at this big drop which happened when this support got broken. Again, look at this price. Again, look at this price. Again, moved higher. What is this line? This is called a support line. This is like a trampoline. Prices come here and bounce back. Why? Because there are more buyers sitting here, right? This price tells you what? If majority of the times this price comes and from here there is a bounce back, which means more buyers are sitting here. This can be what we call it as a support zone. From here till maybe down here. See this, and then somewhere around here. This is your support zone. See how it tried to break it, again bounced back. Look from here, here. And when this line is broken, it just goes down. So when supports are broken, you're out of that trade. No need to hold on to your buying positions. Your stop loss should get hit. That is support 1. If you move further, look at this. There are multiple supports. Look at this price. You see this? Look at this, look at this, look at this. Right? 82,637. Similarly, see from where prices are coming down. Look at these peaks right here. If you see, look at these peaks, right? This right here. Look at these, all these peaks. What is this? 83,983, 84,000. Very close to 84,000.
Sometimes included brokers, okay, it's the volume that.
Yes.
That is the number of shares or number of buyers?
No, that is the number of buyers. So basically, you will see.
Sometimes it started like a Siemens, say Tesla, like a 700K only.
Yeah.
Only 100K.
In case of shares, it is shares. The volume is number of shares. Yeah, they have green and red going on.
The last line is the volume actually.
Yeah.
In the morning we say around only 500,
Yeah.
become 1,000,
Yeah.
then become 100,000, 5,000, 1 million. And that sometimes what happens, it goes when the volume increases,
Yeah.
even the prices go up.
Yeah.
Sometimes volume increases, prices go down.
So you will see when price has shot up, if that high price is supported by higher volumes, that is mostly there are more buyers. That is the reason why price has gone up. But if you see price has gone up, but there are not many buyers, the volumes are very less, that means it will eventually come down. Because that increase which has happened, so let's say for example, if, no, please, no problem. So let's say price has gone up of the stock. At the same time, you see the volumes have also increased, which means this increase is genuine. There are more buyers here. But when you see that the price has gone up, but volumes are somewhere around this or declining, that means this is not a genuine push. The price looks higher maybe due to a recent sentiment, but it will not be up for too long. So when you are determining a trend, a higher price increase with the higher volume means that the trend might be changing further.
It might be suppose the people get information later on after
Yeah.
half an hour, 1 hour, and they start.
So that should reflect in the volume, sir. If there is less buyers who are buying higher quantities and the stock is going up, that means there are fewer buyers with big quantities. That doesn't mean a big trend is going to change. The trend will move when majority of the volumes, more buyers back the price.
So the price movement is you can say that it is strategically based on the volumes.
It is strategically based on the volume. So see, we like to say,
Both way.
when we are looking at charts, we are looking at demand and supply. See, the fundamentals will play their role, but the point is, at the end of the day, it is demand and supply. In a market, there are buyers and sellers. If the price increase or the price spike is supported by higher volumes, it comes across more genuine. It might be changing the trend. But if you see a sudden spike, but the volume did not increase that much,
Volume means the share available in the market, right?
sir, it could be the number of participants also. So the way it shows.
No, I'm sure the interview because I see that.
Yeah.
The volume and the attracted column. Check that, okay?
So,
I was just confused. I'm not sure. It's like buyers or is the volume, the share number of
it
shares.
must be written. Volume is actually, so there are two elements must be given over there.
It's not mentioned. That's why I'm just checking.
Okay.
Just verifying. Okay.
I think they should have mentioned because there are two elements there. They will show red or green.
They means the volume only measure volume there.
Okay.
So when
I
you
think
said
I can
this,
check that for
when
you.
said this,
Yeah.
what you can say, the buyers,
Yeah.
So that's why I asked this question.
Okay. I'll check that for you. I think they must have mentioned it. See, here we cannot see the volumes because these are more like derivatives.
Okay.
But here you can only see that if the prices are touching at the roof and coming down, that means this is where your profit booking should happen. So that is sometimes a lot of people would ask, if I buy at price X, where should I book my profit? Now, first of all, the profit booking, I feel day on day, it should be based on percentage terms. Whatever money you have put, if you are getting an X amount of percentage return, you have put $10,000, you are getting $100 in return, that is 1%.
Yes.
Getting $1,000 return, that is 10%. You have to understand that percentage return something which is justified. 1% a day, very good. 1% a month may not satisfy what you like. So I always feel that return computation should be in percentage, but when you are looking as a day trader on the chart, exit of the trade should be very close to these resistance points because the higher are the chances, if you keep holding on to it, it might touch here and again comes down to your buying price. So something which could have worked out for you, you could have entered at the trade again, but now you are still holding on to the same trade because you did not book the profit. That is why it is important first to define your trade. You always must define your objective. How long this trade is going to be for. If I am entering it for today, then you should have in mind that today if my targets are not achieved, I just close this trade, tomorrow I look at a new trend and move on. it will always be like this. Not all your trades are always going to be in green. Not every day is going to be a very good day. But the best of the best traders we have seen, when you make losses on one day in a few trades and you feel it's not your day, just close everything, wait, take a good sleep, get up in the morning, again look at the trends and then enter. Do not try to take revenge from the market.
Yes.
It will not end well. I mean, it happens with the best of us. I'm standing here, but I have also been through this situation.
Don't be emotional in this.
Yeah. It's very difficult, right? I mean, we are humans after all.
Absolutely. Yes.
We have all colors of emotion. So it happens with the best of us. And it has nothing to do whether you are educated or not, whether you're aware or not, whether you're knowledgeable or not. It's just at that particular moment, it does not matter who you are. It's just your emotions. Either you are confident, you are learned, you know how it works, you have done it so many times. But that is where the uncertainty part comes in. That is why it is really important that your entry and exits should be planned. I'm looking at a 30 minutes chart right now. This is where Bitcoin is currently, right? What is my resistance zone here? Because this right here, if I were to draw one more line somewhere around, so this and then this, which is 84,690. This entire zone is a zone of resistance. Price reaches to 84 or between 84,500. I should be short selling. Now you would say, but Bitcoin has gone up to 84,000, it might go to 90. On technical, on the chart, it's a short sell. You think Trump or Musk might come in the evening, say something about it. That could be the rise. You're thinking fundamentally. On a short term 30 minutes chart, it's a short. Very simple. So you are looking at this, you must short sell here. You should put a stop loss slightly above this. Because if this resistance is broken, if this ceiling is broken, then prices might just rally. So either you short sell here, or you just wait for the prices to break this ceiling, then go for a buy. Same goes for support. If the price comes down here, this 81,187, this is where you should buy and close your short sell. It breaks this support, again start a short selling trade because it is probably going down further. This goes for every single instrument. When you do the same thing in shares, now in shares, you will think that Tesla, Amazon, wouldn't they rely more on their balance sheets, their earnings, their revenue rather than on this? True. But we assume in technical analysis, the price which we see is a fair value price. No amount of earnings or news can surprise us. So when we are doing a technical analysis, we look at the charts. If we were to think fundamentally, we would look at the earnings also. So understanding trend, support, resistance, it's really important. See, look at the products which move a lot. So look at something like, look at gold. We all know that gold has crossed $3,000. Look at a 30 minutes chart, how it has behaved. So look at this. This is, right? Or even here, right? Right? Look at this channel. How? Look at this buy. Look at these buys right here. Look at these sells right here. The moment this range got broken, look at this trend right here. And then look at this consolidation. And then look at this downside and again slightly here. Would we assume? We assume market moves in trends. But from here till here, there was a range which was formed. The same thing. If you see now, look at this. So it went up. Look at this, right? Somewhere around this level. Ideally, it should be this, right? Broke and then going sideways. Look at this. What is it? 3029. This is the level. Touches 330, 3037, comes down. So we are looking at these levels right here. So your buy, it is 3037 right now. Now you should not buy. If you're a short-term trader, wait for it to come down 3029. Buy then. Keep a stop loss below this. So there is a support zone right here. So this is 3025. You buy at 3029. Keep a stop loss below 3025, maybe 3019, 3018. It breaks this, it's going to go down further. This is what the chart says. Goes back to 3037. Look at this, right? So you buy at 329, sell it at 37. Keep doing this until you see a breakout further happening. So if you do that with every product, different kinds of product, but every time you trade, you do this or this, think about it. What is the probability of your trades going wrong every single time when you do it? So day trading is about probabilities. If you trade into different products, some long, some short, but your entry and exits are defined like at these levels or at breakouts, it increases the chance of profitability. But if you're not looking at support resistance, you're not looking at the trend, just buying blindly or selling blindly, that is where it becomes slightly dangerous, right? This is how you draw. Now there are some technical indicators which have been devised for these things. Because we are looking at gold, so there is something called a commodity channel index, okay? So we are looking at a 30 minutes chart right now. I go to technicals. CCI, okay?
Is there a special access that we'll have to get to
No. This is available. This is very much available, and you can definitely have a look at it. See, this is a technical indicator.
Thanks, Yogesh.
Sir, no problem, please.
Yogesh, I apologize for coming late.
No worries, please.
Is there some way I can get this online? Because
Yeah, we are recording it on Zoom also.
Okay.
We'll send it to you, the recording also.
okay, I've
Yeah,
already
perfect.
registered, but it's been a bit of a challenge.
No, definitely.
Thank you so much.
In fact, we'll do more webinars next time so that everybody can join more over online as well.
Yeah.
So definitely.
Getting here is a bit of
I understand, sir.
Thank you so
So if you have a card, please get your parking validated from the reception. We validate for 2 hours.
Oh,
Yeah, we can do it. You parked at building 4 ground.
yeah, we parked in the ground floor.
Yeah, please get it validated. They will do it.
Thank you so much.
It's parking is actually a problem.
Coming in and then getting out is.
Yeah. Now see, this is a new thing. So this is not actually a new thing, but a lot of people would want to know about this. CCI is a commodity channel index, right? It basically compares the current price of a commodity with the overall average price. Now, this, when I put it as an indicator, so we always see this. If it reaches above 100, which means it has reached to a category which is overbought. From here, the short selling should happen. Below, you look at from a buying perspective. Like this, when we see, so for example, and you can always, so I have something which I can also share it. Yeah. So there are different indicators which we are looking at it. When we are looking at CCI, which is a commodity channel index, right? Now, commodity channel index, it allows you to understand the overbought and oversold categories. Right now, currently, so if you see here and then if you see here, right now it is 13, still not clear. Wait for either of the ranges to come in. Similarly, there is something called relative strength index, which tells you about the momentum of a price. So if the price is going up, at what speed, at what momentum it will continue to go higher. So if you let's say this is gold
So the one that you showed now is the
commodity channel index, and let's say I put it on a 30 minutes chart, technical, and I make it RSI, which is relative strength index. I'm putting overbought category as 80 and 20. Normally they put 70, 30, but because the volatility is really high in gold, see this. And if
But why did you give 80 and 20?
so the RSI levels, let me put it actually 70 and 30. Yeah. Okay. Now if you see this, so RSI is called relative strength index, okay? It basically moves or it measures the momentum or the speed at which a trend is going up or down. It also tells us that, so there are two numerical values as per the math which has been done in calculating relative strength index. So what they have done is they have taken the higher prices, all the higher prices or all the prices which were the highest in last 14 days, day on day.
14 days, okay. That's why you gave the period as
14. All the lowest prices in last 14 days, lowest every day which was the low. They have combined it together, took an average out of it, and they have created a strength index which shows the overbought and oversold categories. So as per the RSI, any level above 70, it shows that the product has been overbought. Now it's time to sell. Any level below 30 shows that it has been oversold. Now should be the time to buy. So if you see here,
So again, does the time frame make a difference here, or is it
because this is a 30 minutes chart, we are looking at last 14 days, so I should make it one day, which will give a better value of this. Yeah. So now you're looking at a 14-day interval, right? When I say 14-day interval, the calculation is based on the prices of 14 days. This what you see, this is since last 1 year because the chart is slightly longer term. But if you see these peaks right here, right now gold is at 73. It doesn't mean that it needs to come down. RSI is built in a manner where it shows that the momentum at which the prices are moving higher or lower. So the trend which the prices have started, what is the speed of this trend, how fast it is. When it reaches above 70, it shows that now is the time that the trend could reverse. But 70 does not mean 73 and it will reverse. It continues to trade above 70, somewhere around 75, 77, 80, and then it reverses. So if you see the previous peaks right here, you see how it touches these levels and then comes down here. Look at here, look at here. Look, these two peaks, look at this, and now it's just here. Could go slightly more higher. But this is a daily chart, which means longer term. So today, if you wanted to buy gold for a longer period of time, you could still rely on that. But you need to be very cautious because it has already reached to a higher band category, right? So it is signaling a sell, but not at the moment, slightly more higher. If, look at these downside levels, look at this, and then look at these tips right here, right? Somewhere around 30.
In this case, would it be advisable for me to put a sell at say 76?
You can, actually, you can.
And then put a sell order at 76 and then wait for it to...
Correct, you can. So you monitor RSI. So look at the average resistance in the RSI. We can say somewhere around this, right? 77.8. So when your RSI reaches to 77.8, could go for a good short sell. It would be worth to enter on a short then rather than abruptly taking it now. But this is on a slightly longer term chart, right? That is why technical indicators, it helps you. This is one of those. You can also do something which is called Bollinger Bands. Bollinger Bands also give you a very good idea because Bollinger Bands or before Bollinger Bands, I'll show you something which on long term also, on short term also you can use it. This is called moving average, and you can just click moving average here. So we are taking 50-day moving average. 50-day moving average simply means average closing price of gold over 50 days, right? When I click on it, save, see this. Moving average has a very simple understanding. Imagine it smoothens out the overall price movement. So if I say in last 50 days, on an average, how much gold has closed at? 2853. This is the average closing price, which means as long as prices are above the moving average line, the trend remains bullish. But when they are below the moving average line, the trend is bearish. See what happens every time when a price falls below the moving average line, it falls. What happens when it starts moving above the moving average line? This is 50 days moving average we are looking at. Longer the duration, so there is 50 days, 100 days, 200 days. When you look at 200 days moving average, you're looking at a longer term. Any product breaks the 200-day moving average, it means a bigger trend is changing. So let's say, for example, if I remove this and go to moving average again and make this instead of 50, 200. You will see it is 2624. It is much lower. The long-term reversal for gold will be when it breaks 2624, because that will be the end of its 200-day moving average. So far it is again higher. If you keep looking at this and let's say last 20 days moving average, much more shorter duration. Now see, this is for a short term period obviously, but this is last 20 days. So if you see, every time it breaks this, it slightly goes down, but as long as it is above this, the prices are still higher. See, from here, as long as it remains very close to this, goes up. Breaks down, another 2 days on the downside. So moving average.
Predominantly in this, it is going upward.
So this is a moving average line. As long as the prices are below that line, the trend goes bearish. Above the line, higher. See, this will be very good if you're looking at stocks. So look at stocks like Tesla, for example. And if you see on a long-term chart, and if you see a moving average line, let's say last maybe 100 days, right? See, it is well below its moving average line, 100 days, right? If you make it 200 days, it has even broken the 200 days moving average line also. That is strong bearish momentum. For Tesla to turn bullish, right? How do we know that Tesla would turn bullish, or when do we know it will turn bullish? It needs to give a closing above 283 on a long term chart. That is how I will know that Tesla has turned bullish, because the 100-day average closing price of Tesla is 283. The moment it broke this, the prices continue to go down 200 days. To go back to a bullish momentum, it must close above 283. If it does, that is where you start buying the stock. So this is for, again, a long-term investor, because you are looking at a long-term chart, you are looking at a 200-day. A lot of traders also, they will use 200-day or 100-day to get a confirmation. So today, right now, it is very bearish, right? You're looking at a long-term chart, it is well below its 200-day average. Imagine something which was moving like this, average, all of a sudden dropped, because the average price was this and now it is well below its average. So still bearish. Needs to recover, go above. If I see the same thing for Amazon, so instead of Tesla, let's say if I see the same thing for Amazon as a stock, and I'm looking at the chart, So look at 100-day moving average, right? Below 215. And if I see 200-day moving average, look here, 199 is what it is. The 200-day moving average which has started for me. So still very close to a 200-day moving average. So if somebody has to start building positions, good time, a good bullish momentum will be when it crosses 215. So if I had to decide between Amazon and Tesla, Amazon better bet as compared in technicals, because Tesla is well below its moving average at the moment. So simple moving average, as it sounds, it just takes the average price of a product and they show you that this is the line of average. If it is below that line, then the price is continuing to bearish. If it goes above that line, it goes bullish. Now, there's one rule. You can have analysis of two moving averages. One can be short term, something like 50-day. One can be slightly long term, 100-day. If the 50-day line crosses above the 100-day line, the trend turns bullish, which is called a golden cross. So I'll show you an example here. Let's say I'm looking at S&P 500, an index, it works the best. So we are looking at technicals. Let's say I select a moving average of 50 days, I put it red, and I select another moving average, and this time 100 days, and I'll change the color of this line to green, right? Now look at this. The crossover which we are looking at, the higher duration, the 100-day moving average, here if you see, this 100-day moving average is crossing the 50-day, showing bearish momentum. So this is called a death cross, when the big longer term duration crosses the shorter term duration. If it was opposite, like let's say if we go back where we can see somewhere around not here, from the crossover, let's say even here, when you will see every single time when a long term moving average crosses above the short term moving average, you will see the trend will mostly continue to go bearish. It is something which is used as an indicator for reversals, right? So whenever the market is reversing, and if you see a short term moving average crossing above a long term moving average, it is said to be under a bullish trend. So now when we talk about it, we are looking at, first of all, we understand the trend. So let's understand, if I have to place a trade right now, right? I'm looking at the platform, every single product I'm looking at. So if I go on my watch list, right here, I open the chart because I have to do it today. So I make a 30 minutes duration. Now 30 minutes duration, see, when it was 3037, we are saying that it is a good shot, right, when it is coming down here. So I'll draw first a line of support which I can see here, and then this is a support zone where I can make, see, this is my support zone, right? So I'll wait for it, either this is my support and This is my resistance, somewhere around 3040. So this is where exactly it touches, and then look at this candle starts coming down from here, right? That is why we are not supposed to buy at that price. We'll wait for it to come down to 3028 or 3025. This is where we are supposed to buy. These are the support zones where we are supposed to be buying. Here, right now, I can do two things. So I can select from market to limit order. Let's say quantity 30 units, and the price 3028. So this time to buy, limit buy. And I can keep a stop loss below 3025, so leave 3022 maybe. Take profit 3040. Right. So 180 stop loss, 360 take profit. 1:2 risk reward. Confirm this trade, place my order. My order is placed. Even I am not looking at this system, doing trade is not important, but doing it at right levels is really important. If this does not hit, no problem. If it goes up from here, no problem. But my entry and exit should be planned in this manner. You don't have to see this throughout the day. You have put your order, even if you're not looking at it, it will get hit. Goes down more than that, 3022, your stop loss will also get hit. You always imagine that you are doing 8 or 10 trades throughout the day in different products. So while I'm doing this at gold, let's say I pick oil, right? 67.10. I look at the chart right now, same 30 minutes. Now if I see 30 minutes duration here, this is where my support should be, which is right somewhere around 66.5. It has gone up. It has reached to a resistance, because if you can see this, look at this peak right here. You see these peaks, right? 66.9, which is 67. Look here. This, look at these, look at this. So ideally, I can short sell now, keep a stop loss slightly higher. My take profit should be 66.5, right? So here what I'm going to do is, let's say, select sell 300 barrels, put a stop loss and take profit. So if my take profit is 66.5, just give me $125. So let's say I put my stop loss $100. That is it, 67.26. Confirm my trade, place my order, it's done. So my sell is exactly here, right? This is where my resistance is. A lot of times it can happen if you really want to check where your support and resistance is within the system, just click here. So it will give you, go on news and analysis, go on technical views. So in built system, there is a way which can provide you your support and resistance. You don't really have to draw lines all the time. Select commodities. Within commodities, you can select the time frame which you want to place a trade for. It could be intraday, it could be long term, could be short term also. And you can look for bullish or bearish trends as well. But it really depends on instrument to instrument. Something like, so, okay. Now this is here.
So you can put both the orders together.
You can.
Or the
Buy and sells also. Yeah, both of them. So if I select,
close, right?
Stop loss is basically you close your trade. Yeah. Even for stop loss, closing, even profit also you can put. Yeah. So if I select intraday here, now in intraday, look at crude oil. So this is US oil. I click on this. See, 67.15 is the resistance, 67.5 is the resistance, 67.85 is the resistance. Buying at 66.10, 65.75, 65.35. What is the reason? RSI is below the neutrality area at 50%. But what does it show? Most importantly, look at the commentary, what it says. It may fall to 65.75 or 66.10, right? What we are looking at the chart. If you see this, short positions below 67.1.5 target 66 or 65.7. Above 67.1.15 target 67.5 and 67.8. So my stop loss is 67.20. The reason is because if it goes above 67.1.5, it might go as high as 67.5 and 67.85, right? So I want to book my loss before that. If it remains below 67.1.5, target profit 66.1. I have put my target at 66.5, but I can reduce it to 66.1 also. So your platform already tells you the support and resistance both. You just select the product, go on technical views, and you will be able to see it. So try to place some trades today. Look at a 30 minutes chart. Don't go too long. Look at a 30 minutes chart. Today just try support and resistances, that is all. More, at least your entire watch list which you have created, do it in Dow Jones, do it in German index, do it in oil, and do $10,000 amount. So you have 10 products, you have $1 million, do $10,000. So the total exposure will be 100,000. It's very less as compared to the account value, but just try to do it. Buy some, short sell a few, and see how it works for you, right? You do it on the basis of technicals, take help of technical views, and you will be able to enter and exit. Where you don't see an entry exit point, do not do the trade. It's a demo account, you want to try it out, please go ahead and see what happens next. Sir.
What is the commission on this? What is the system? How much system makes in that?
So there are.
Because see, you put a stop loss, okay,
Yeah.
and buy.
Yeah.
So I should know exactly how much.
Exactly.
If I'm playing with a 2%,
Exactly.
so I should know how much the system is making money.
So what will happen is every time when you are going to,
Yes.
anytime when you are going to place the trade, right? Let's say if I put $10,000 here as an amount. When I do it, quantity say 149 barrels or 150 barrels, right?
Okay.
So it will show you commission here $2.2 here before you execute the trade. It will be charged to you every time you do the transaction. So when you buy 2.2, when you sell 2.2. So in this $4.
So average you charge 0.02%.
So not percent, it depends on the quantity. So in case of crude oil, if you go.
This is crude oil and it is 150 barrels, right?
Correct. So if you see here the product overview, it shows commission is 0.015 per unit. Yeah. This is available on the platform also.
But it is just
Yeah.
it's an elephant brain, no?
No worries. No problem. See, you can find this on your product overview also, but it is mentioned over here 0.015 per unit, but
0.015 dollars.
per 1.5 is minimum. So if
So it is $15 per lot.
per lot, yeah. If you're buying 1,000 barrels, it will be $15 by $15.
Okay, $1.5 okay, minimum.
Correct. You'll be able to find that in the
150
platform.
units, okay, so you're paying, okay, fine.
2.2. Now in that 150 units, if price goes up by $1 also, you are making $150 profit. So that is something, and oil moves easily $1.5 or $2 a day. So from a commission perspective, won't be a problem. But again, you should
What
know.
about the shares of same, Tesla?
Shares are different. So shares, you're charged, say, 8 cents per share, but minimum is $10.
Per share?
8 cents per share, 0.08, what we call it,
0.08, huh?
per share, but minimum will be $10. If you're buying 100 shares,
Minimum?
$10.
Minimum $10.
Yeah.
Okay, one more question.
That
one
is
more
your
question.
spread, right? That is your spread.
Minimum.
Apart from commission, there is a spread.
Okay.
Yeah.
So
That-
what
that-
you showed me was the commission.
Yeah.
Yeah,
What
that's
you
it.
showed us was the commission.
This is the
That's- that's
What
commission.
is the spread and
Yeah.
what is the spread for this?
Spread, this is a demo account, so it is slightly wider, but on the real accounts, it will be much lower. Consider, say, 5 cents or maybe. But that is again, spreads are lower in terms of commodities or currencies or even in indices. Yes, sir. No, no, please ask.
So regarding this, okay, what about this the currency exchanges? Okay, suppose I'm buying from euro and buying from the dollars. Now,
Yeah.
Okay. Now suppose I want to buy Rolls Royce is in a euro.
Correct.
Okay. And then again I buy Siemens is a euro.
Correct.
And then in that case, what is the exchange?
Sir, it's basically the current market exchange. So if you're buying a European stock, because your account is dollar denomination, so when you're buying a European stock, whatever is the euro going on at that time is the real market exchange rate. So your position is converted into dollars at that. Whenever you will close the trade, whatever is the euro at that time, that will impact.
I can keep the euro in the, so for example, if I invested 20,000 euro, okay?
Yeah.
I invested, okay?
Yeah.
I made a profit of 2,000 euro.
Correct.
Equal to the euro, okay?
Correct.
I just keep it in my account again.
Yeah.
If I keep using the same euro again and again, okay?
If you have opened a euro denominated account,
Okay.
like this is a dollar denominated account.
No, but even if I buy one time, okay? Once
Yeah.
I buy, so for example, I invested $10,000 in the euro
Correct.
account, okay?
Yeah.
Once I buy some share of $20,000 shares,
Correct.
okay? Once I buy the shares, you're converted the dollar into euro already,
Correct.
right?
Yeah.
So once you convert that, then I sell in euro only, okay? The money comes in euro.
So the money will always be, so see, don't forget what will happen is the moment you buy a European stock,
Okay.
right? So the dollar value is converted because
First time is okay, fine. Okay.
because your profit and loss is converted in dollars.
Yeah.
So every night when the market closes, you can see a loss in your amount if the price is down, right? That price is in dollars. Every night when the market closes in mark to market, you will be able to see the loss in your positions.
That's fine. That's fine.
Correct.
My question is okay. I understood that. Okay.
Yeah.
Because it's keep fluctuating. Okay. That's
Correct.
fine.
Correct.
What I'm saying is, if I got $100,
Yeah.
$25 you invest in a euro.
Correct.
In that $25,000, okay, I get some profit of that $300 more. $28,000.
Yeah.
Okay? That will remain as 28,000 euro. Because 28,000 euro will remain as a euro only.
No, it will be in dollars.
Sir, it will be in dollars, na?
How come? See, I'm buying in euro, no? See, like,
So you're buying in euros, but the moment you bought in euros, that position got converted in dollars. So every time a euro movement is happening, what you're saying is right. You have made a 4,000 euro profit, but in your account, that 4,000 euro is real time changed into a dollar profit or loss.
no, that's fine. That's okay.
Yeah.
That's okay. But my question is not, I think, see, the $25,000, okay, when I convert it to euro,
Correct.
come 27,000, 27
Yeah.
26, I don't know.
Yeah.
26, okay. 27 euro. Once I sell that, when I close the position in euro only, the money will come in euro, right, in my account.
Sir, in dollars. It will come in euros, but it will immediately get converted in dollars.
Okay, fine. But,
Yeah.
but for next time, again, I buy euro stock, okay?
Yeah.
Again, you convert that.
In dollars, yeah.
So there's a currency charges for that.
Whatever is the real time, sir. You could make money also over it. Like when you bought,
No. Money not make money. You don't understand that first. You have to convert every time you will convert, right?
yes, sir. Every time, because your account denomination is in USD, you can choose to open a euro account where your account value is in euros. So when you buy a European index, it will not convert in dollars.
How much is the conversion rate actually?
So it depends on the market rate. Na? Like for example, if today euro is 1.0910, you took a trade today, it will get exchanged. So right now, for example, if I
Just what system would I make out of that? Just how to make it. My question is okay, market I understand, but what system?
for
would I make
us, not really, and this is not our. There is
out
no.
of it? System is like
Yeah.
any system like any platform.
Yeah.
Essential finance something like it.
So that's what I'm saying. So in this case, let's say for example, if I buy 1 unit, this is German index.
Okay.
Place my order, and I go to positions here. So here the conversion which has happened is 1.0899 or 1.0902,
Okay, fine.
right? So if I let's say see euro dollar, see this is exactly here 1.0908, 1.0902. So I'm showing you euro versus dollar conversion here.
The real-time conversion takes place at the time of executing.
Yeah, but there, but that's 1.089 and
1.0908, 1.0903. So this is something which is real time. So when Now, if you see your loss, it is in dollars. So if you hold on to it and if it goes up, the price is moved up by 100 euro, your profit is 100 euros, but it will be shown in dollars here. So even when you close it, it will come back in dollars. But if you had changed this to euro denomination, you transferred euros to your trading account, then this will not impact you because you're buying a German index. But then if you buy US index, that would impact. Right?
But it's not a big difference. It's not a big difference.
Not really, actually.
Not really. They just don't understand.
Yeah, I mean, this is something which is very common.
Not like UA exchange. Huh?
Sorry?
Not like UA exchange or
No.
that's the exchange.
No,
That's
nothing like
4%,
that.
no?
Yeah, no, not that much. Because the euro pound is a very liquid currency. If it was something like Turkish lira, it would move a lot. That would impact you. Yeah.
It's fine. But what about euro and dollars? Yen is like 40, no, 40.8.
149, 148. But yen also moves a lot these days.
40.80
Yeah.
or something.
So you can do that. So when we meet tomorrow we are going to learn a few strategies. Today was more about technical. Tomorrow we are going to actually learn a few portfolio strategies, what we can do. We'll do some margin trading, short selling, try to understand how leverage works, margin call when it comes, what not to do, what to do. And we'll just connect again. So tomorrow is going to be the last day of these sessions. If you have more questions, want to stay longer, we can definitely. Right? Thank you.
Sir. Thank you very
Thank you.
much.
Thank you, sir.